Good afternoon and welcome to the SAFESTAY PLC Interim Results Investor Presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right-hand corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives during the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll, and I'd now like to hand you over to Peter Zilke. Good afternoon to you, sir.
Thank you very much, Alessandro, and good afternoon to everybody, and thank you very much for joining us this afternoon, and thank you for your interest in SAFESTAY PLC. Over the next 30 minutes, 45 minutes, including question and answer, so we want to share some more context around our half-year results 2024 at SAFESTAY Hostels and Hotels. My name is Peter Zilke, I'm the COO at SAFESTAY, and joining me today is Paul Hingston, CFO of our company.
Hi.
There are 4 or 5 points we structured the presentation this afternoon. First, a brief introduction to SAFESTAY and the hostel market. Then Paul will talk you through in more detail about the financial details, a strategic update from myself, and also a brief outlook for the remainder of the current financial year, followed by a question and answer session at the end of the presentation. Starting with the introduction to SAFESTAY Hostels and Hotels.
Okay, so if I just introduce myself to say, Paul Hingston, the CFO, joined in February 2022. I've extensive experience at board level in both travel and hospitality, and worked in PLCs, private companies, and private equity funded companies. I'll now hand back to Peter.
Thank you. And my name is Peter Zilke, I'm the COO and primarily responsible for the execution of the strategy within SAFESTAY to drive the company forward and streamline the brand. Internally, my background is 25 years experience in branded hospitality industry across various countries in the world. Also, I would like to introduce Larry Lippman, our executive chairman, who founded the company in 2011. And he's mainly responsible for setting the group strategy and the business development of SAFESTAY Hostels and Hotels. And joined on the board are 3 non-executive directors, Michael Hurst, OBE, Paul Cummins, and Sarah Widet. SAFESTAY Hostels and Hotels is one of the largest hostel groups in Europe, with a growing portfolio of hostels across 12 countries now. In key destination cities. We're currently operating near 4,000 beds in shared dorms, which won't come as a surprise to you in a hostel. But what a lot of people may not know, that all our hostels also have private rooms. And what I mean with private rooms is hotel-like rooms, ensuite rooms with a double bed or 2 singles. So very much like a hotel accommodation. We operating at the moment, we run 20 properties at the moment, 17 are operating, and you see 3 properties a little bit shaded. This is Brighton, Budapest, and Kalpe, which we currently refurbish or await some licensing to open them within the next few months. Supporting the board is an experienced management team of well-experienced hospitality experts with strong brand experience. These are area managers of Southern Europe, Central Europe, and the UK, a head of commercial running all our commercial functions, and our head of finance who supports Paul. I mean, SAFESTAY differentiates itself mainly, or one key differentiator is that we are a true pan-European hostel operator. Many of our competitors are very single country focused. This might be the UK, Germany, France, or Spain. We are one of the few who operate in different countries. And as I said, we're operating now in 12 countries at the moment, and obviously want to grow that in the near future. The hostel market in itself is currently valued at just under $5 billion by the end of 2023, and it is projected that the hostel market will increase to near $9 billion by the end of 2029. It won't come as a major surprise to you that our key customer market are millennials and Gen Z, so the general backpacker is a very, very important customer group for us, together with groups. But what we see more and more is also that families and business travelers use hostels as an affordable alternative to for accommodation in city centers. It's not unusual, and we see a very positive trend there that a family of 4, let's say, is booking a 4-bed dorm where the children sleep upstairs, the parents downstairs, for example, and which is far more affordable than a similar accommodation in a hotel where they may need 2 bedrooms or 1 large room. The hostel market in itself is extremely fragmented. There are very few companies which operate in a similar model like SAFESTAY, which with a centralized brand, with a group character. Most hostels are owner-operators, so it's not unusual that you go into a destination where we have 10 hostels, let's say, and all are individual operators and companies. So it's very, very different from what we know from the hotel market, which is hugely consolidated with IHG and Holiday Inn, Marriott, Hilton, etc. So this is something where we feel we are very well positioned to capitalize with our structure on that growth, to play a part in consolidating this hugely fragmented hostel market going forward. And talking about our position in this environment, and I probably refer to the last point on this particular slide first. We have a well-invested platform for future growth opportunities. We managed to increase our net asset value by 17% over the first 6 months of this financial year to 49.8 pence. So this gives us a strong platform for that. We have a strong improvement track record to expand. I will come to the acquisitions which we done in the first 6 months of this financial year later on. And we have a platform which allows us from here onwards to increase our portfolio at pace with brand manuals and other operational expertise which we gathered in SAFESTAY hostels and hotels. Before Paul shares with you some more details about the financial results of the first half 2024, I wanted to point out 3 key areas from this slide here. The first one is occupancy, so the volume of our business, the customers we host in our hostels. We are extremely pleased that we were able to push that forward by nearly 2% to a 71% average occupancy across the estate. So this gives us great confidence that our product is sought after, is accepted, customers coming back. We have a number of group bookings and agents who use us as their preferred choice. So we're extremely pleased from the responses we receive in that area. The average bed rate, so the amount of money we charge per bed sold, has dropped by 4%. It's still considerably up on the pre-pandemic levels, but it goes hand in hand with the pressure which households and companies perhaps still feel. Our strategy to drive volume and balance that with the rate has materialized and come to fruition. And the proof of that is in the third element, in the third line, which is the total revenue per available bed. So this is, in our opinion, or this is our strategy, the key performance indicator. How much revenue do we generate with each bed we have available in the estate? And as you can see, we were able to push that forward by 3.2% to £18.28. This includes not only the very important accommodation revenue, but it includes also the food and beverage revenue and any ancillary revenues. A few key points on our strategic progress, which we completed over the last in the first 6 months of 24. We successfully refinanced with our house bank HSBC in January and moved it all into a single 16 million 5-year term loan, and with an addition of a new 2.5 revolving credit facility. We made 2 freehold acquisitions, one in Brighton, a superb property just opposite the Royal Pavilion, with 3-4 minutes walk to the beach and to the Brighton Pier. We purchased a hotel in Cordoba, in the center of the historic town of this UNESCO heritage town in southern Spain. And we signed our first management contract just outside Alicante in Spain, in a city called Calpe on the Costa Blanca. I come to the management and franchise contracts a little bit later in our presentation. We also appointed a business development manager who will focus on the franchise expansion. And we expanded our commercial hub in Warsaw. The commercial hub in Warsaw was formed in August last year. And it's a one-stop shop which serves the whole estate with revenue management, yield management tasks, marketing, a call center for our group bookings and others, but also HR and other support functions. So a hugely important office to drive our commercial success. And the success is evident by the increased total revenue per available bed, which I mentioned earlier, and also to stimulate the demand, reaching a near 71% occupancy in the first half of 2024. So with that, I hand over to Paul, who will run through some numbers from the first half of 2024.
Thanks, Peter. So I start off with the income statement. You can see that gross profit has increased by 8.2%, resulting from an increase in food, beverage and ancillary sales of 0.6 million, which is a 6% increase. Just for your information, ancillary sales cover luggage storage, customer laundry and things like vending machines. It's also good that we've maintained the cost of sales at 1.7 million through tight cost control. And this has also led to admin expense as a percentage of total sales falling by 7.9%. Another good point is that profit after tax from continuing operations increased 111% and is now positive. Moving on to the balance sheet, total borrowings have increased by 3 million, but this has been used to leverage debt to fund acquisitions. But as some of the acquisitions have actually been funded out of cash flow though, so it is a combination of both of these. Gearing is now at 57.4%, which is slightly up from 2023. But if you exclude Elephant and Castle, our flagship site, because it's not really bank debt, then gearing is actually at 41.8%, which is more reasonable. Then if you look, our freeholds and long leaseholds are valued at 50.1 million, which is up from 38.7 million last year, and I'll cover that off in the next slide. So our portfolio includes 20 properties, including freeholds and long leaseholds. So if you look at the range of valuations, we've got Elephant and Castle at 27.2 million, Glasgow at 4.9, and York at 2.9 million. So Edinburgh, a new acquisition, is valued at 4.3 million, and the Pisa valuation has increased to 6.7 million. Then both Cordoba and Brighton, our 2 latest acquisitions, are based on the acquisition price. So Cordoba is 1.8 million and Brighton is 2.3 million. And then the effect of this is our net asset value per share has increased by 17.2% to 49.8p. So again, that's a strong performance. Now, if you look at cash flow, so cash generated from operations was 5 million. Now, this is 0.4 million down on 2023, but it's primarily due to paying tax on overseas profits, which actually shows that the business is becoming more profitable. Peter has touched on about the refinancing, and the original loan was consolidated to take advantage of preferential interest rates. Also, as I said before, the additional debt has been raised to fund acquisitions. And as you can see, a total of 5.7 million has been invested in the acquisition and renovation of new properties. Aside from the figures, we're also completed a lot of work to provide us a platform for future growth. So in terms of our banking platform and payments, all overseas bank accounts are moving to Santander and their partner banks in 2024. So the use of a single banking platform for overseas banks and integrated payments will create efficiencies. Additionally, we've enhanced our forecasting and modelling. So this means we've got better analysis, which will improve our decision making. Additionally, we've got a new procurement platform. So we're working with a third-party procurement platform, which will be introduced to maximum efficiency and to take advantage of increased purchasing power. I'll now hand you back to Peter.
Thank you, Paul. Let me give you some context around the activities we've done over the last 6 months, or the first 6 months, 24, in a strategic update. I broke this down into 3 elements. It's first an update on the operational excellence, delivering the very pleasing result which we delivered in the first 6 months, the strategic expansion, but also the franchising opportunities and management opportunities we see for the medium and long term for SAFESTAY. I mentioned the total revenue per available bed earlier in the presentation. It was one of our key strategies to focus on that key KPI. And the fact that we were able to drive that forward over the last 2 years from £16.88 to £18.28 for every single bed we have available in the portfolio, revenue generated for each bed in the portfolio is very, very pleasing. So revenue generation is certainly on the right track. Of course, like many other businesses, we had considerable challenges in our in the costs, which have increased at the end in the last 6 months, but also at the end of 23 with the inflation levels, although they have come down. But especially also the headwind from the increased payroll inflation across Europe was something which we had to manage very, very carefully. We all know that in the UK, for example, the national minimum wage went up by 11%, not dissimilar in many other countries in Europe. Poland, for example, the minimum wage gone up by 17% in January and another 1% in July. So adding this all together, which created obviously the demand to be more proactive in our operational cost management. And the utilization of our developed manual standardization of operating processes and creating synergies as a group, a process and a strategy which we launched in the middle of 2023 pays now dividends. As you see on the right-hand side, the first graph, the left one, which is the operating departmental profitability. And what I mean with that is the revenue minus the operating costs. So it includes costs such as online travel agent, commission, laundry, food and beverage we purchase, payroll, utility, and maintenance costs, but it doesn't include rent or other fixed overheads. And as you can see, the operating departments improved their profitability by 6% from 45 to 51, which is extremely pleasing result considering the cost pressures we faced in the first 6 months of this year. Breaking this down into our key revenue streams, accommodation, food and beverage, and ancillary, you see that each area increased the profitability, again, despite the fact that the costs increased in many areas. Although accommodation performed extremely well at 62% conversion already, we managed to push that to 63. Food and beverage performed at 25% conversion. The profitability of this operating department improved to 44%, and this was achieved by signing up suppliers, single suppliers in the UK. We're working with one brewery now for all our properties, something we want to roll out, or we're working in Spain in our properties at the moment, and the same will apply across the portfolio, where we streamline our supplier base somewhat. Although the smallest revenue stream, ancillaries, which is luggage storage, guest laundry, or vending machine, is the smallest revenue stream out of the three. But we are extremely pleased. First of all, we were able to increase that by 50%, that revenue stream, but also been able to push that from 91% conversion to 96%. So it's a highly profitable revenue stream. And whilst I doubt that we will be able to push that much further than 96% conversion, the focus on generating extra revenue from luggage storage, laundry, guest laundry, etc., because it's such a highly profitable element, is hugely important. And without losing the focus on our key revenue stream, accommodation, we will certainly push that element forward as well. To deliver this upside in occupancy and total revenue per available bed, we took the decision late 23 to increase our marketing spend. We launched a new website in 23, which in the middle of 23, we saw the dividends in the late part of 23 and certainly in the first half of this financial year. And one element I want to touch on in particular is the online travel agent commissions. So online travel agents, companies like Booking.com, Expedia, Hostelworld, etc., hugely important partners to us. We're working very well with them, and that there will continue to be an important source of our accommodation business. But as you can see in the graph on the right-hand side, in a 2023 market report from Muse, which suggests that hotels in 23 receive 8% of direct bookings and the rest through online travel agents. Hostels are a little bit better. They generate 13% of their booking direct with their own website and with their own call centers, etc. So non-commissionable. So when you consider that we pay online travel agents up to 17% of each booking, it's obviously an important target to focus on to reduce the reliance on these online travel agents. And as you can see, SAFESTAY performs extremely well with the strategic platforms we created in the commercial hub. Whilst we ended in financial year 23 with 27% of our bookings coming through our direct channels, our own website, the commercial hub, call center, and group bookings, etc. In the first half of this year, 42% of our bookings coming through direct channels. That's extremely pleasing and obviously helps the conversion of our revenue into EBITDA significantly. The investment of marketing spend is clearly also very much focused on digital marketing. We are undergoing an SEO, search engine optimization process at the moment, but also the social media element is massively important. We are very pleased that we crossed the 50,000 Instagram followers mark, a 9% growth versus last year. Instagram is definitely the platform where our consumer target market communicates. So we are very active on that platform, but also on other platforms as well to drive demand. And this is all concentrated in our central sales and central support hub in Warsaw to drive these numbers forward. Expansion is clearly something which we done extremely well and which we will continue to do at pace over the next months and years. We're very pleased that we were able to open our Edinburgh property in June. We purchased this property in October last year, done a complete refurbishment and opened in the beginning of June. It was always a target market. The Taylor Swift effect comes to mind. We wanted to capitalize on that. And indeed, on the third day of opening, our hostel was fully booked. So, and since then, following the Fringe, etc., Edinburgh performs extremely well, and we're very pleased with the result of that. And we will copy this process over to our 3 new acquisitions we made over the first 6 months of this year. We purchased a hotel in Cordoba, which is a 90-bed hotel. We will change this gradually into a hostel. The refurbishment work starts actually next week. The last elements of our managed property in Kalpe in terms of refurbishment are completed as we speak, and we're waiting for the final licenses to open that later this year. And the new purchase of Brighton, which was completed in June this year, which we will convert into a 200-bedroom hostel once the licenses have been received and once the renovation has been completed as well. Since the first half of 24, so just recently, we signed a new lease in Budapest, in the capital of Hungary, in a fantastic building in the city center, 3 minutes from the opera and 10-12 minutes walk from the Danube River and the Parliament building. We will refurbish that as well, and it's expected that we open Budapest and Brighton together somewhere in spring 2025, ready for the super important summer season, of course. So this brings us at the moment to 20 sites across major European destinations. I mentioned franchise and management. We are very pleased that we started this process, that we signed our first management contract with an owner in Spain, and will open the Kalpe property very soon as a manager. This asset-light model offers great opportunity for SAFESTAY going forward to expand our footprint not only in Europe, but outside Europe as well. But it also creates great opportunity for owners and operators to benefit from our brand, from the strength of our brand, from the strength of our brand manuals, building designs, and operating manuals, which we created over the last 12 months or so. To support that, we appointed a business development manager who focuses directly on franchise opportunities in Europe and further afield. He started in June 24 and is now actively involved in contacting current owner operators to franchise with us. The case to franchise with us, or to allow to use our expertise to manage a property, is underpinned by our guest mix. 73% of our guests arrive from the outside of the hostel destination country. So what I mean is that we have in each hostel, in average, wherever you are, 73% international guests. So these new markets are hugely important for owners, developers, new openings, and we receive encouraging interest from not only developers who want to build hostels from scratch, but also building owners and current operators. So having an extra string adding an extra string to our bow, beside the leasehold and the freehold opportunity, we believe that we can expand our footprint rapidly with management and franchise opportunities in the medium and long term. To underpinning this growth opportunity is the blueprint we created. The pictures you see on the bottom, excuse me, the pictures you see on the bottom of that slide are pictures from our Edinburgh property, and this is the blueprint and the template which we created now and will roll out in new properties, but also into refurbishment of existing properties over time. So hugely important to have this brand standard, which gives us now a platform to accelerate expansion across the field. Investment in our staff is very important. It's obviously not always easy to operate in 12 different countries with similar number of languages, etc. But we work with a partner on a multilingual online training tool which serves all languages so that we can train our staff in our standards, in our procedures. So this is not only mandatory trainings, but this is also guest service, revenue, etc. Complementing that is the launch of our intranet, our Stay Connect intranet, again, where staff can research our company, learn about our company, explore operational manuals and brand standards, and to implement them in the day-to-day operation across Europe. It is hugely important. Excuse me. The last slide gives you just a brief outlook for the rest of this financial year. July and August started extremely well, with revenues up on 2023, and we have no doubt that the positive trend will continue for the remaining months. The remaining months, meaning September, October, November, and December, all pacing ahead of last year, meaning we have more bookings on the books than we had last year at the same time. So we're very positive that we will end on a high by the end of this financial year. The same applies for 2025. We see a strong group booking interest, again driven by our commercial hub in Warsaw. So the amount of bookings and the inquiries we have is very, very pleasing. Last but not least is I want to kind of refocus on this fragmented market and the opportunity which SAFESTAY hostels and hotels brings to the market as playing a part to consolidate this fragmented market. Yes, as I mentioned before, we know it from the Marriotts, the Hiltons and all that. And whilst it will take some time till we reach the size of such companies, but the opportunity to sign up and offer franchising and management contracts to the market is enormous, and the interest we receive is certainly encouraging. This completes the presentation from us, and we can go into Q&A session.
Perfect. Peter, Paul, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to read the questions that have been submitted today, I'd like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received questions throughout today's presentation. If I could ask you to read out those questions and give response when it's appropriate to do so, I'll pick up from you both at the end.
Thank you. And thank you all for the question. There are quite a few in there. I hope we can go through most, if not all of them, as we go along. Let me start. Can you tell us a bit more about the Budapest leasehold acquisition? Yeah, we're very excited about the fact that to be present in Hungary, in Budapest, beautiful city. I was lucky enough to be there only a couple of weeks ago to inspect the building and meet with stakeholders there. It will be a 150-bedroom hostel by the time we open in spring 2025. We applied for leasehold, licenses at the moment, so that there is lots of work going on at the moment. We expect in the first year of operation, meaning 25, to receive a modest EBITDA contribution of £50,000 from Budapest. That will increase. Budapest is a superb destination, and we are massively excited to be there. Are you targeting any countries in particular for future acquisition? We are always opportunistic, is probably the answer. First of all, if the opportunity for freehold comes along and the commercial stack up, we're certainly interested. The same applies to leasehold, of course. We have a very solid operating structure in Spain and in particular, and in the UK in particular, because of the number of properties we have there, and we believe both countries still offer growth opportunity. But Eastern Europe is certainly a growth market, hence our Budapest acquisition. So I believe we focus on that as well. But if you remember the first slide with the map, there are some white spots. France would be fantastic to come, but the commercial elements need to stack up. It needs to make sense for the company and for the shareholders, of course, to acquire an additional portfolio. Do you see scope to undertake further management contracts similar to the Calpe agreement? How big could this be for the company? Or how big this could be for the company? I mean, I hope you don't expect me to give put a number on that. So, but we are very excited about the asset light strategy which we created. Management contracts, and in particular franchise contracts, is certainly something we want to focus on. We have a strong expertise in the market. We're one of the best operators in the hostel environment. So to to sell that expertise, if you would like to say, is a logical step to increase our footprint. So how big could that be for the company? I think it could be big, but it's a medium and long-term strategy for us. Is there new geographies you're looking to? Should we expect further expansion within the existing location? I think I answered that earlier with the locations and all that. Ancillary and food and beverage was particularly strong in H1. What was the driver, and is this sustainable during H2? There are two drivers really on that. That's a very good question. Thank you for that. Of course, the increase of our group bookings brings additional revenue. I don't want to say automatically, but strongly with that. So this is one element. But also the appointment of a group support manager driving food and beverage sales, focusing on food and beverage sales in our properties, has increased the turnover of the food and beverage area. So, and going further, the signing up of or the working together with suppliers like individual breweries, individual food concepts, which we launched in the UK, which is a fusion menu, which is launched in London, Elephant and Castle, Edinburgh, and Holland Park, gives us a great differentiator, and I'm convinced it will continue into H2 and beyond. The increase to 42.3% of bookings through direct channels is impressive. What further digital marketing and digital are planned to continue growing this percentage and reduce reliance on commission-based platforms? 42%, I mean, yes, we focus to push that further, of course, but without being complacent, if we stick at 42%, it would be a record. I never worked in a hospitality company, which operated on that level. But look, digital marketing is our core marketing channel. Absolutely. We're working with a company called Triptease, which handles our meta search, our travel ads, and on Google and etc. Our rebooking platforms, and we all know it when you Google something, this quite often annoying finish your booking advert. All these things together with social media marketing will increase and will drive that. So, but of course, the direct channels include groups, and this is a very important element for us as well. And again, the establishing the commercial hub in Warsaw plays a hugely important part in that element. So we drive that forward, but without being kind of complacent, 42% is a strong performance. If we push that to 45%, then I would be extremely pleased. How does SAFESTAY differentiate itself from increasingly competitive markets, especially against both traditional hotels and emerging accommodation platforms like Airbnb? Yeah, look, hostels by definition are slightly different. We focus on affordability, other accommodation providers as well, granted. But what hostels particular offer is the social space, it's the social interaction. So whilst you don't have that, certainly not in Airbnb, and to a limited extent in hotels, the focus and to create social spaces in the hostel is something, and this lifestyle traveler, lifestyle customer is what we see coming through more and more. So, and this is where we differentiate ourselves very much from other accommodation providers. How we differentiate ourselves to other hostel operators is we have a strong operating platform which has a brand standard, but also the location, which if you look at our portfolio compared to competitors, no other competitor is represented in key destinations like we are, and in this destination with a central location we offer to our customers. This is unique, and this is recognized by our customers who book us again and again and again, especially groups, but also individual guests. Could you talk more about initial learnings of the carbon management contract and how you should think about a split going forward between acquiring properties versus franchising contracts. Additionally, what are the key characteristics and financial targets you look for when acquiring new properties? Look, I mean, the key learnings from the CalPER management contract, I mean, there are many. It was our first management contract. You know, we had to create a management structure, a support structure, the company registration, and all that. But look, ultimately, we will manage CalPER like it is one of our own, with the profitability targets we set ourselves. For the benefit of the owner, we charge the fee. We have a profit share incentive in the management contracts, and this is something which we will continue to do so. So it will be profitable for us, of course it will be, with relatively little investment and all that. And this is what the franchise and management model obviously kind of suggests, the asset-light model. So it offers great opportunity going forward. Operating in so many countries and different languages, taxes, legal system must be a heavy drain on resources. Should the focus be on fewer countries in more locations within those countries? Well, whoever that mentioned, you're absolutely right. It of course brings its challenges with us. We have superb partners who help us with the taxes and the legal systems in the different countries. We want to grow our portfolio in countries where we operate. Of course we do. But the offering of operating in 12 countries as it is at the moment is a unique selling point for our core customer, the backpacker, if I may say so, because we see it again and again. A customer travels from Warsaw to Prague to Bratislava and hopefully to Budapest going forward, or from Berlin to Brussels, etc. This has a unique selling point, and we see this again and again. We launched in the summer this year a program in Spain, where that was exclusively to Spain, but we will copy that into Eastern Europe, where we sell packages, 3 nights in each hostel. So I think it's advantageous to have more countries, despite the headache it brings with operating in different languages and all that. But we have a superb management team in various locations across Europe, which manage that process extremely well.
One other point to make, Peter, is that we've, like, for example, we now use PKF in each of the countries. So we've created consistency and synergy. And it's the same with lawyers. We use one firm of lawyers for the whole of Eastern Europe. So by doing that, we create consistency and efficiency. And that's one of the paths for combating that complexity.
Yeah, thank you. Interested to know how the Athens hotel is doing, and if there are plans of expansion in Greece, like in Spain, similar market, in Italy. Athens is doing extremely well. You saw the very first picture of our presentation, which is the view from our roof terrace of the Athens building, the Acropolis right opposite. I think Greece offers itself for an expansion, and if opportunities arise, we will be certainly interested to talk these developers, owners, operators, etc. So Greece certainly offers opportunities, more in the leisure segment, maybe in the islands, etc., etc. The same applies to Italy. Italy, we are representing Pisa. Of course, we are interested in Rome. Of course, we are interested in Milan and other destinations. But as I said, the commercials need to be right. The rent, the purchase price, whatever it is, they need to be right for our company, and then we will expand. But no, all countries you mentioned in these questions are certainly of interest to us. And perhaps we have time for one more question. What is the average stay in your hostels, and how can you increase the average spend? The average length of stay across our hostels is 2.2 nights. 2.2, which is not unexpected, which is a good average. for us. We want to make that longer, and for that we started, as I mentioned a second ago, with packages which staying 3 nights or more in particular areas. Of course, it's beneficial from a cost element to have guests stay longer rather than 1 night, 1 night, 1 night. And we're working on that. This is certainly a target for us to increase the average length of stay for that. And to increase the average spend, again, as I mentioned earlier, the offering of unique food and beverage concepts like the fusion menu we offer in London, Elephant and Castle, or in the UK, we want to roll that out in other areas as well. We want to keep people in our hostels, but we recognize as well the location we have is almost begging for people to explore the city. We recognize that as well. We are an accommodation provider first of all, and F&B supplier as an ancillary, as an extra, of course. But it's a very important extra. One little element, perhaps in York, for example, we installed draft beer. It comes down to simple elements like that, and this happened around 4 or 5 months ago, and the beverage sales has doubled. So identifying opportunities like that will drive the average spend in all the properties. There might be some more a question coming up, and we will answer that. And Alessandro, I hand it back to you because I believe we can answer or will answer these questions when we share the presentation.
Peter, Paul, thank you very much for answering those questions from investors. Of course, as Peter just mentioned, the company can review all the questions submitted today, and they can publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which I know is particularly important to you both, Peter, could I just ask you for a few closing comments?
Yeah, look, again, thank you very much for your interest in SAFESTAY hostels and hotels. We believe the hard work we put in, not only in the first 6 months of this financial year, but certainly over the last 2 years, let's say, to create what we believe a superb platform to accelerate our growth is solid. We looking forward to an exciting finish of this financial year, and we certainly believe that we created a brand which has the ability and will grow outside Europe, but first and foremost within Europe as well. So with that in mind, thank you very much for your time today, and I might see you or you hear me at the next presentation when we will announce our full year results 2024. Thank you.
Thank you.
Thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, and I'm sure will be greatly valued by the company. On behalf of the management team of SAFESTAY PLC, we'd like to thank you for attending today's presentation, and good afternoon to you all.